In recent years, mutual funds have become the preferred modes or one of the preferred modes of investment for a number of retail investors in India, thanks to the flexibility they afford. Also, the many options they bring to the table in terms of risk elements, types of asset classes, and timelines are making investors gravitate towards them for different financial goals. Now, the choice of mutual funds can make or break your portfolio. So, in this age of an information overload, picking the right mutual funds for different objectives without giving into the hype can be tricky. Thematic investing is one such investment strategy which is gaining ground among retail investors who are looking to capitalize on a particular theme with the aim of generating alpha returns. Thematic investments in India have been steadily gaining awareness. Themes can differ widely from a simple theme based on market capitalization to futuristic themes such as firms working in spaces like fintech, artificial intelligence, electric transportation, blockchain, or even businesses working on social impact issues like health and safety and climate change. Now, investors can choose from a wide variety of themes based on their preferences or even craft their own themes and pick funds and stocks accordingly. So, to throw more light on the phenomenon of thematic investing emerging as a preferred path for investors and how it could be a smart way to ace asset allocation, Mirai Asset Investment Managers India Private Limited is hosting this special presentation where we will delve into the gamut of thematic investing. I'm your host, Gautam Srinivasan, and we have with us Siddharth Srivastav, head of ETF products at Mirai Asset Investment Managers India Private Limited, Ashish Chadda, CEO at Chadda Investment Consultants Private Limited, and Sumit Duseja, who's the co founder of True Mind Capital. Gentlemen, it's great to have you come in and provide your expertise on the topic. And I'm looking forward to many of the insights that you will present on this topic so that our viewers can have a sort of a clearer path on investing. So, in that, Siddharth, let me start with you. Could you throw some light first on the gamut of thematic investing and why it is growing globally?
Sure. So, thematic investing is basically an approach which focuses on long term trends rather than specific companies or sectors, enabling investors to access these structural one time shift that can change industry or industries. It has gained traction globally because investor wants exposure to several mega trends which are emerging globally right now, like electric and autonomous vehicles, artificial intelligence, cloud computing, green energy, industrial automation, etc. They are seeing that these themes are actually causing a very strong shift in a way things are being done, and the companies which are involved in these segments stand to potentially benefit in the long run, and they want access to it. Entering at the right time in these themes may provide investors the opportunity to participate in the growth of these themes over time. And that is why you are seeing a lot of people talking about thematic investing. I mean, one example can be, if you look at electric vehicles and autonomous vehicles, it is hardly a debate right now that in next 10 years or 15 years, uh, EVs and autonomous vehicles are going to be the bread and butter of automobile industries. So why not should investor have the chance to invest in companies which are part of EVs and AVs? Now, in terms of uh, traction which we are seeing here, it's phenomenal actually. Over last 3 years, till the end of 2021, AUM in thematic funds have grown by more than threefolds. It stood at $806 billion worldwide as of the end of 2021. Even the ETFs tracking the thematic indices, the AUM of them stood at around $284 billion, with around more than 1,000 ETF tracking and providing avenues to such thematic investments. I think
So, in a
it is
sense, is
just
it an
awareness.
indication of maturity coming in when it comes to, say, the retail investment space, Siddharth?
I think it is more so with the awareness which is growing, right? People want to know about more places where they can invest. Obviously, market cap based and sector cap based funds are there, but people are seeing that it is usually rarely that so many themes are emerging at a single point of time, and people are seeing that these have huge potential. I mentioned about cloud computing. It has huge potential in terms of how it has already changed on how things are done by businesses, and how much potential it has to change it for next 5, 10, 15 years. So these long term structural themes, people are very curious about. They want to participate, and they actually try to participate it in the early cycle so that they are able to ride the entire wave. Because if you enter it late, you may enter when most of the interesting aspects have already taken place, and you may not see the run up. But if you enter early, you may be able to get that benefit of enjoying the entire sector or segment grow, as the theme gets more and more adopted by industries.
Absolutely. So along with the broader growth story, you have these subsets also emerging where its growth potential is something that investors can tap into. Let's get down to the brass tacks. Sumit, let me come to you. So how is thematic investing different from, say, market cap funds and sector funds? If you could clarify that for our viewers.
All right. Thanks, Gautam. Um, by its definition, market cap funds focus on investing in companies ranked as per the market capitalization. For example, according to the SEBI categorization, top 100 companies should be classified as large cap companies. So, any fund which is a large cap fund has to invest at least 80% of its corpus in these top 100 companies. Typically, these companies are having market capitalization of 50,000 crore plus. Similarly, companies which are ranked from 101 to 250 in terms of market capitalization can be classified or categorized under mid-cap category. A mid-cap fund would have to invest at least 65% of its corpus in mid-cap companies, where typically the size ranges between 15,000 crore to 50,000 crore. Companies which are ranked above 250, 251 and above would fall under small cap category. So any portfolio which is small cap portfolio, it has to invest at least 65% of the corpus in small cap companies. Sectoral fund, by definition, means a fund is investing at least 80% of its corpus in a particular industry or a particular sector. For example, pharma sector fund. There could be an IT sector fund investing in only IT companies. There could be a banking sector fund. As Siddharth also explained, thematic fund focuses on long-term trends, taking advantage of investing in companies that will benefit from these long-term trends and structural shifts. So these these funds cut across market capitalization, across sectors, or they could also be investing in subset of a particular sector. Uh, so let me take you to a particular theme. Recently, government announced a policy made in India. So one fund can focus on investing in companies that will benefit from this policy of made in India, which will cut across large cap, mid cap, small cap, and even different sectors. Sectors could be auto sector, pharma sector, electronic sector. So sector agnostic it is. So a theme which is made in India is focusing across different sectors and different market capitalization. Similarly, on the other hand, a subset of a sector can also be looked at for a particular thematic investment. For example, electric vehicles, they form a subset of an auto sector. So if you're investing in electric vehicles, you are investing in companies, electric vehicle themes, which are investing in companies that will benefit from the growth in EVs in the future. But this is a subset and represent a subset of an auto sector.
All right. And in terms of approaching thematic funds, say investors, a retail investor wants to get into an idea. What are some of the things they should be discussing with their, say, financial advisors when they have that conversation about, say, investing in thematic funds? Any tips that you would like to share, Sumit?
See, I mean, many investors have certain ideas and beliefs about changing world situation and how they are doing things and how the world will be doing things. And they are also invested in certain purpose, certain causes. So purpose-based investment like ESG investment, which has picked up significantly, which is ensuring sustainability of humanity, longer, sustainability of humanity and the way we do things. So that's where one needs to understand balance between how much allocation one needs to have in the portfolio based on their choices, whether that investment would be a good investment. So it's not necessarily if you like something that will turn out to be a good investment. So to have a balance, one can have some exposure of your liking in a portfolio, but not too much to have any significant impact on your overall returns. So it has to be a balanced, a process which is very thought through and see what are the risk elements involved, and if the kind of risk you are able to take, if you are highly if you are aggressive investor in terms of your risk profile, then you can have a higher exposure. If you are not so much, then you can have a lower exposure. So that's how one has to decide and get to a balance in order to generate returns over a longer period of time.
Absolutely. And it's also about tying your investments to financial goals while you do that. Siddharth, anything to add before I go to Ashish? Siddharth, I believe you're on mute. If you could unmute yourself.
Yeah, so just a couple of things I think Sumit has added them very nicely. And most important thing is obviously understanding the risk, because typically themes are very different from each other, and the investor expectations should be, uh, let's say, very practical, and also the risk should be as per the theme in which he or she is keen to invest in. Like Sumit mentioned, if you're talking about make in India, then you're typically investing in, let's say, a lot of manufacturing companies, and obviously electronics and other segments of the market where government is pushing the PLI. But if you're investing in something like a green energy, you are investing in completely different set of industries. You're investing in, let's say, EVs, you're potentially exposed to, let's say, companies which are involved in lithium mining, companies which are involved in battery technologies, etc. So each and every theme, I believe, carry very different set of risk. It can be simply consisting of companies uh, which are just from India. It can be from, let's say, from US, from China, carry a different sort of risk. So investor needs to be very much aware about the return potential as well as the risk which these investments carry. All these themes are very fancy. All these themes have huge long-term potential, but it is important to understand both what the expectation needs to be and what the potential risks are.
All right. Expectations and risk, two keywords for investors to always consider. Ashish, let me bring you into the conversation in response to what Siddharth and Sumit have said. A lot of potential, a lot of themes out there, whether it's ESG, Make in India. Your thoughts on the themes that are gaining popularity, first of all, and your response to what Siddharth and Sumit have said.
Thank you for having me on this show, Gautam. So I think artificial intelligence, robotics, biopharma, healthcare, old age, cybersecurity, gaming, clouds, cloud computing, SaaS, and there's some funny ones as well. You have marijuana. That's something that's catching on in the West quite nicely. Clean energy is again, coming in very strongly, and you have funds actually on exponential technologies. Like, we'll come to the risk part at the end of what I have to tell you. Then you have space theme funds. You have sports betting and gaming. we actually make country exposures which we consider to be, very volatile. For example, China, when we take exposures, I generally prefer doing healthcare and staples, consumer brands, because I find that a lot safer, or robotics and AI, because that's something that's backed by the government there. Then you have cyber security, you have defense sector funds. Now it is China plus one, so you have a combination of Mexico, Taiwan, Vietnam, and of course now you have utilities. So the line of utility of being coal powered or oil powered is now merging, because a lot of these big companies themselves have got into solar, which was initially came from smaller companies. So at one level, people have to very clearly understand the theme doesn't come from a new company alone. Themes can come in from big companies starting subsidiaries when they see change, because they are in the process of in the business of communication or energy. Now you have a big company setting up charging power stations. Then crypto mining has been big. It has also been devastating, but the crypto series of funds have created wealth, and they have destroyed a lot of. And I'll come back to this point on risk, which is so important, which both Sumit and Siddharth have brought out so lucidly. Then you have smart mobility. You have themes around blockchain, etc. So I think essentially these are the things: robotics, and also country specific. For example, Israel has a lot of innovation. So there are themes around Israel, and some interesting short-term topical ones like inflation. We got into inflation funds about a year and a half. In hindsight, it was good luck, but it saved us a lot of this carnage. And I don't do it professionally; I do it as a hobby. But every once in a while, there are these themes where you can short treasuries. So those are interesting, because you can actually bet against the US 20-year or US 30-year. Then there are carbon credits. Carbon credits again very dicey. Exactly to Sumit and Siddharth's point. The whole thing is actually made up of futures. So risk management in these products is very, very important and critical. You have private jets. We had exposures to defense sector funds for many years for the dividend. I come from a defense background. And we kind of thought China, Taiwan is hot, but the unpredictability of our business is such that out popped Russia and Ukraine. So as big as the world is, as many themes are there. But to the point that both Siddharth and Sumit mentioned on risk and your question, I think you be very, very careful when you are buying this. I'll give you a small example. There's an iShares Robo Fund. Now, it comes from the US, so you would expect that it will have more robotic companies from the West. The top three shares when I last saw it was Alibaba, Tencent, and JD.com. So all of a sudden you are assuming a mighty country risk also. So I think you have to approach this very, very carefully.
Absolutely. And extending that point on risk, Ashish, what would you say to investors, some of whom might be passive, right? And if they are interested in exploring, say, certain thematic ideas, but they don't want to do it in a safer way, any tips that you would share with investors, Ashish?
Yeah, so Gautam is very important. You see, the English language is expanded enormously by the financial services industry, the media. What is the basic essence of, and by all of us, what is the basic essence of the stock markets to give, capital for risk from savers into people who, will into consumers of capital who hope to, generate a higher return on capital and give it back. What happens in all this is that you could see enormous losses. And I'll give you an example of ARKK, which has been the poster child of the theme business. So I actually did the numbers for the show. The 1 year return on it is 69% minus. You have a 3-year return of minus 5%, a 5-year return of 8%, while the S&P has just fallen 10% in 1 year. In 3 years, it is up 10%, and in 5 years, it's up 11%. And since inception, this theme-based fund has done 10.8, and the S&P has done 10.79. I've been with this. We've been investing in this fund all the way from inception, and we were getting out by December 20. And last year, when all these Paytms were happening in India, so we fortunately had zero exposures to all this. It's just coincidence. But you could see when these funds were falling off the hill, and people were investing. So this is very, very important. I could, if you have time, I could tell you something about the marijuana fund also. You know. So the marijuana funds came in May 17 at a $10 price. By September 18, it was $21. It was sucking in the whole world. Those funds bloated in size. And today's price is like $5. And in 1 year, the return is minus 70. In 3 years, the return is minus 70. And since inception, the return is minus 50. So, you'll be very, very, I think both Sumit and Siddharth, and I'm reiterating this point that if you come in, you have to come in early when these funds are not in the limelight, because and when everybody's talking about it, and we have a queue, which is not going to happen with because when 20 clients start telling me to do something, that is the time to run.
That's a very important point, because at the end of the day, everyone can be swayed with themes. You mentioned cryptocurrency, right? 2 years back, it would have been a different conversation, and now it's a different conversation. But looking at a sort of a sensible approach, Siddharth, let me bring you in. Do you think passive funds may be a better way to gain exposure to different themes?
I think so. I might be a bit biased because I look at passive products in Mira Asset, but like what Ashish mentioned, that when he was looking at a robo fund based out of US, the top holdings were I think Chinese companies, right? But that is the sort of transparency the passive funds bring. It is method driven in nature. The portfolio is known on a daily basis, and by looking at the theme, by looking at how companies are selected and what the portfolio makeup is, you can take a very conscious, transparent call whether to take exposure or not, because you know where, what sort of thing you are getting into. For example, and when we were analyzing few EV funds, there were some funds which had, let's say, exposure to the entire ecosystem of EVs, starting from mining to battery manufacturing to tech and to EV manufacturers. Then there were some funds which are only focused on EV manufacturers, right? There was no exposure towards, let's say, commodities like lithium, etc. And the performance of both will be very different, because ultimately the underlying portfolio is different. So, but that is the sort of transparency passive brings, and that is why I think for themes, passive are becoming popular, because people want to know what sort of exposure they are getting into. Second reason is that typically these are themes, you typically don't want to have fund manager risk or biasness. You want to capture the entire theme as a whole, and that is one reason also why a passive is probably the chosen route. And two other reasons: one is obviously lower cost. People prefer low cost vehicles. Typically, if I'm looking at any of these mega trend based ETFs, they are typically around 60 basis point or 70 basis point, 0.6% or 0.7%, which is still cheaper than the active funds, right? And the last one is obviously, I'm mentioning again, transparency, that if you know what you're getting into, you are aware about the portfolio on a daily basis, you know what changes are taking place, and you can take a very informed call, which is important when it comes to, I think, any investing, and but becomes more important for thematic investing.
Absolutely. And taking forward what you said about capturing that ecosystem play, Sumit, let me bring you into the conversation. Considering you mentioned ESG, you mentioned Make in India. These are the themes which are prevalent. But in terms of effectively capturing ecosystem plays, what are some of the themes which you feel Indian investors can explore for investments?
So, as per my research, understanding, and observation, I realized two mega trends which are prevailing right now and which will have a major role to play going forward. One is climate change. We all are aware of the drastic impact of climate change that will be on the humanity. So, a lot of policies which are already being implemented, a lot of policies will come forward that will be benefiting companies which will be either reducing the pace of climate change or maybe healing whatever the damage we have already done to the climate. So the companies which are into renewable energies, companies which may reduce the usage of plastic, companies which are in water purification or provide access to the safe drinking water, or companies which are into recycling. These are the companies which will benefit immensely from the policy initiatives in order to negate the negative impact of climate change. Another theme which I think is prevailing right now is the shift in global economic center from West to Asia. This could be a long-term theme. It may take a decade or two to finally see the impact of this change. But with this recent Russian attack on Ukraine, has already started the ball rolling, and we are seeing China, Russia creating their own reserve currency away from the dominant USG. So these changes and major other developments globally indicate that there is a shift happening, and it makes sense that one should diversify a bit of their portfolio in the Asian economies or the companies in the Asian economies other than India. Having said this, no conversation will end without understanding the risk element also. As Ashish also mentioned, I would reiterate the same. One should not be riding the wave later on. It's always important to ride the wave early. If you're riding it
Hmm.
when the wave is already very high, you're due for a crash. So that's why, depending on what theme you are investing in, it's also important to understand how broader or narrower the theme is. Narrower the theme is, higher the risk element is. Therefore, it's important to, balance the risk. Depending on the risk profile, you can take exposure of around 10% to 20% in a particular theme, and depending on how broad it is. So it will also help you, gain from the benefits by investing in a theme if it works out well. But if it doesn't, or it whimpers, within in between, then you won't have to sustain big portfolio losses. So that's where your conviction has to be balanced with a strategic portfolio asset allocation.
All right. Now, considering any wave has ebbs and flows, and we've discussed, say, cryptocurrency or other factors, there are external factors, for example, say, the conflict between Russia and Ukraine, and there are internal factors. Let's say, in terms of cryptocurrency, there's a Ethereum merge, which plays a part. There's volatility, and we've discussed about risk. Ashish, I want to know from you, how should investors create portfolios using thematic products, and what should be the allocation? Any strategies or tips that you would share to our investors as we look to wrap up this conversation?
Correct. So, I'm going to use the scriptures. It's very important. And I'll quote: the study of the scriptures is useless so long as the highest truth is unknown, and it is equally useless when the highest truth has already been known. This is from Adi Shankaracharya. What is important for us to never forget is that asset allocation of a client, his need for liquidity, her need for liquidity, timeline for investment, and how much risk are they willing to take in their heads. That is very important. So you have to first see your asset allocation, and this comes into your risk bucket, quintessentially. Uh, and you have to make sure that your liquidity need is completely satisfied. And this is stuff which is, you will end up becoming an Abhimanyu if you do not manage this properly. And India has just seen a train wreck last year. But anybody who got into all this 3 years, 5 years ago, has done very well if they exited in time. So I think that is very, very important. Now, the other important thing is that a portfolio will necessarily comprise of an index fund. It will also comprise of an actively managed diversified equity fund, also a small cap index fund, and a small cap diversified, a small cap managed fund. There's a logic to it. Look at the banking crisis. Now, everybody who sat in index funds when the banking crisis happened lost their shirt. An active manager could have possibly got out. Likewise, if you notice the S&P 500, or even in India, everything got biased towards just 5 companies. Now, if you're in a passive fund, you had it. So I think you have to the Buddhist way of life of balance is it's neti neti bolte hai na, neither this nor that. So you have to kind of have a balance around your portfolio. And that be said, uh, again, there's a category of people who have enormous domain knowledge. Now, while you may have domain knowledge of the product, of cryptos, you may have domain knowledge of EVs. I've had a case of a client who lives abroad, and I could sense his sauciness, but his entire portfolio was metaverse, uh, and the 6 top companies and 4, 5 extremely, streaming companies like Roku, etc. He managed to lose 40%. Now, at one hand, when you're managing risk, when a $10 million portfolio falls to 6 million, it doesn't matter to you. But can your head manage that? So my sense broadly is up to 50 lakhs. Take small exposures, 3 to 5%, somewhat on the lines of what Sumit mentioned. And as your portfolio sizes crosses 50 lakhs, then incrementally you can go up 5-10%. And in all fairness, see, my job is not, making money is Siddharth's job. It's his job to make them, to read the market. My job is to manage, no phone calls when I'm on a holiday or no phone calls when I'm sleeping. So from that perspective, incremental sums of money above 50 lakhs, you can take 5, 10, 15%, exactly like on the lines of what Sumit said, into theme-based funds. And, if you're working in a particular line of work, and if you're seeing this evolve, I think that is the time for you to take that exposure to 10, 15% above 50 lakhs. But at the same time, the moment you have to have an exit strategy, 10, 15, 20%, and saying 30% aega is all humbug because private equity is selling at that point in time. When you're buying all this, what you have to remember is that private equity is selling, and they are smart guys. Like Sumit's a CFA, I think, so they're all very smart fellows. They're not going to let you make money so easily. So I think you have to kind of appreciate that and build your portfolio around it. And by all means, 5-10%. If you're more than 10 crores, by all means, take a 50% exposure above 10 crores. I think that is sensible.
Absolutely. Words of advice. Hopefully, it brings investors up to speed. And considering, Siddharth, the pressure is on you, as Ashish mentioned, to show me the money for investors. Any words of advice on navigating the investment chakra view and how thematic funds can actually play a part of a guide?
No, I think in this conversation, we have alluded to one fact that uh, thematic investments, from a point of view of attractiveness, from the point of view of potentially generating good returns, is obviously very attractive, right? But there is an element of risk. Each theme is different, so enter at the right time. That is very important. There are themes which are long term in nature, like Sumit mentioned. Probably there are themes which are short term in nature. Differentiate between the two, because especially for the short term, you need to have an exit strategy. For the long term, like probably EV, I feel it's a long term theme. Green energy is a long term theme. You can probably have a long term investment strategy. And like what Ashish mentioned, that ultimately it is important to get the allocation right, that somewhere around 5-10% is what you should look at. Shouldn't get too much swayed by the potential of a theme. It is important that your bread and butter is still going to be, I feel, core allocation is still going to be your large cap funds. On the equity side, this should be more on the satellite portfolio with around 5-10%, depending on your risk profile. If your risk profile is not good, probably thematic investments are not for you. If your risk profile is decent, you can take that exposure. Then obviously start with little amount, get that uh, feel of investing in themes, and if you're up for it, probably you can increase it incrementally up to a certain amount, like 5-10%. And probably requires more discipline, probably requires more acumen, probably requires more ability to take the volatility. And if it all pans out well, it can generate very reasonable returns, but obviously it comes with these conditions.
All right, balance and discipline, the keywords that have emerged. On that note, though, it's time to bring this discussion to a close. Our viewers should now hopefully have a primer about the thematic investing route to explore further. And the mutual fund industry is going through a lot of changes, and the thematic wave is one of them, with more and more fund houses spearheading the movement by offering innovative schemes. Hopefully, the discussion today gives enough insight and information to investors out there to approach thematic investments with balance and discipline. On that note, thank you so much to all of you, Siddharth, Ashish, and Sumit, for joining us in this conversation and sharing with us your expertise. Meanwhile, to our viewers, till next time, this is your host, Gautam Srinivasan, signing off. Have a great day, everyone.
Thank you.
Mutual fund investments are subject to market risk. Read all scheme related documents carefully.